What are the 5 best rated dividend aristocrats right now? That's exactly what I'll be going through in today's video with you. I'm actually intending to film 2 videos today. My other video will be what are the highest yielding dividend aristocrats. So I'll have both angles covered. We'll have best rated into this video and then highest yielding in the other video. So you'll be able to watch either of those videos at your leisure. If you're new to this channel, welcome. My name's Andy, and in this channel I like to talk about money and success. If you're interested in making, saving or investing money, please be sure to hit that subscribe button down below, hit the notification bell, and then you get notified every time I release a new video. And if you enjoy this content and find it useful, please do remember to give it a thumbs up, because that helps the YouTube algorithm, which in turn helps me, and of course I do appreciate it. So let's just dive straight in. What is a dividend aristocrat? A dividend aristocrat has increased the dividends it pays to shareholders for at least 25 years in a row. It must be a member of the S&P 500. They tend to be large, well-established companies. They tend to be largely recession-proof. And dividend aristocrats are similar to dividend kings, which are companies that have increased their dividends for more than 50 years. If you're interested in dividend kings, I have made a video about all of the dividend kings, in fact, which I'll put a link to up there and in the description down below. You can check those out at your leisure. So what rating will I be going by? I will be going by the Quant rating on Seeking Alpha. So what are Quant ratings? Seeking Alpha's Quant ratings are an objective, unemotional evaluation of each stock based on data, such as the company's financial statements, the stock's price performance, and analyst estimates of the company's future revenue and earnings. Over 100 metrics for each stock are compared to the same metrics for the other stocks in its sector. The stock is then assigned a rating: strong sell, sell, hold, buy, or strong buy, and a score from 1 to 5.0, where 1.0 is a strong sell and 5.0 is a strong buy. So that is what we're going to be ranking it on. It's the highest rated according to the Quant rating on Seeking Alpha. This is something you only have access to if you pay for the premium version of Seeking Alpha, which I do. So if you don't, this will hopefully be interesting for you. If you're interested in getting the premium version of Seeking Alpha, hands up now, I am an affiliate of that, although I've used it for many years. I have only recently become an affiliate of this particular company, and so I have a link in the description down below, and if you use that to sign up, you will actually get a discount off the premium subscription if you do choose to do that. But anyway, let's dive in and have a look at the top 5 rated dividend aristocrats by Quant rating. So the first one is Arrow Financial Corporation, ticker symbol AROW. This is actually a bank. You can see in the past 12 months it is actually down 10.88%, which isn't so bad when you consider the S&P 500 is actually down over 16% in the past 12 months at the point I'm making this video. Its dividend yield is 3.39%. If we look over here, you can see how its dividends have been increased over time, and you can see the graph is, quite frankly, a thing of beauty, and it has been increasing its dividend yield for the past 27 years, not the yield, the dividends have been increasing for the past 27 years. If I just flick over to the scorecard now, you can see the 5-year growth rate is 5.64% and the payout ratio is 35.42%. If we have a quick look at its financials, you can see that its revenue per share has been increasing year on year for the past 10 years. And of course, if we go down and look at the dividend per share, of course, that has been as well, as already demonstrated. So next stock. Next stock is National Retail Properties Incorporated, ticker symbol NNN. This one is a REIT, or real estate investment trust. You can see here it's actually down just over 12% in the past 12 months, which again is slightly better than the S&P. You can see, of course, the Quant rating on the side there, 4.61 is the Quant rating, so it's got it as a strong buy. The dividend yield on this one is a little bit higher, as you can see, at 5.33%. It's got a payout ratio of 124%. Don't worry too much about that. It is a REIT, so they will quite often pay out more, and it does look like they're going to be making a loss, but they're not. Don't worry, in this instance it's okay. The 5-year growth rate is 3.07%, so not quite as fast growth. And if we look at the graph, you can see the growth looks like this. If we look at the financials, scroll down, I'm just interested in looking at the revenue per share because I only want to do this quickly today. You can see again that has been increasing year over year without fail for the past 10 years, as of course has the dividend. When I find it, there's a dividend increasing year on year. Okay, next stock is First Source Corporation. Again, this one is a bank. Interestingly, this one's actually gone up over the last 12 months. So it's actually 20% up, and that's just the share price. Its dividend yield's not as big at 2.17%. And if we head over to see the dividends, there we go. So it's grown very nicely. Its dividend's been growing 11.05% over the past 5 years. It's got a 2.17% dividend yield and a 26.75% payout ratio, which is nice and low. If we look at the dividend history, we'll get to see the chart, put that on max. And again, you can see what a thing of beauty. Continually up, up, up and away. Quick look at its financials, and the financials are increasing year on year. As you can see, the revenue per share has just continually been increasing. And as a quick double check, you can see, so has the dividend per share. In fact, over the past 10 years, it has more than doubled its dividend, which is just lovely. Next stock is Aflac Incorporated. Now, Aflac Incorporated, a life and health insurance company. You can see that one's actually up 8.44% in the past year. We go over and look at its dividends. It's 2.58% dividend yield right now. So 2.58% dividend yield, 25.3% payout ratio, and that's been growing even faster at 12.21% over the past 5 years. Let's have a look at the history there. Put it on maximum, and there you go. You can see that increasing. And what's an interesting thing I think with this one is it's paying 40 cents per quarter now. If you went back and you bought that in 2003, you were getting 4 cents per quarter. So that has literally times by 10 the dividend in that time period, literally 11 years, and the dividend has times by 10. I just find that amazing. That is dividend growth. Financials, revenue per share, as you can see, it actually dipped a little bit between 2012 and 2013. Dipped again to 2014, down again to 2015, but since 2015, it's pretty much been up, up and away, and it is obviously clearly a lot higher now than it was back in 2012. Next stock, Chevron Corporation. It's a favorite amongst dividend investors. As you can see, this one's actually up over the past year, 55%. That is just amazing. So it's up a lot, but then it is an oil company. So of course it has benefited from the restriction in oil supplies at the moment, which has meant that oil companies in general have gone up in price. Hence this has as well. Its current dividend yield is 3.21%. I'll be quite honest with you, that's low for this stock. When I looked at this stock year ago, it was a lot higher dividend yield because the price was so much lower. So personally, it's not one I'm looking at buying. I would wait for this one to drop in value or raise its dividend even more before I would consider buying it myself. If we look at its dividends, so 3.21%, its payout ratio is nice and low, 37.55%, 5.33% growth. As you can see, this is for 34 years of consecutive growth. And if we look at the dividend history, put that on max view, you can see that has been growing very, very nicely indeed. This one, interestingly, on the financial front, its revenue per share has been frankly all over the place. As you can see, up and down, and it's actually lower today than it was back in 2012. Although, of course, as you can see on the dividends per share, that has been increasing year on year as you would expect. So I hope you found that useful. Remember, if you're interested in the highest yielding dividend aristocrats, check out this video right here because I'm making that one next. Thanks for watching. Have a nice day. Bye bye.